If you're still drawing single lines for support and resistance, you're going to get faked out. Smart money doesn't respect lines, it respects zones, areas where buying or selling pressure builds up. In this video, I'll show you exactly how to find and draw these zones, and how to use them to catch cleaner trades. Welcome back to AutoMarkets Built Not Begged. This is episode 3 of the Mastering Price Action series. If you're serious about building your trading skills, subscribe now. No fluff, just structure. Let's get into it. Most retail traders mark one price level, and what happens? Price tags that level, then wicks through it and either reverses or keeps going, and the trader is confused. Why? Because support and resistance is never one exact price. It's an area where orders cluster. Banks and institutions scale into and out of trades across zones. If you mark zones, you align with how the big players move. Here's how I draw support and resistance zones, step by step. Step 1. Go to the higher time frame. Start with either the hour or the daily. Zoom out, look for areas where price reacted multiple times. Step 2. Identify the wick extremes and the body closes. The zone sits between these two, from the lowest body close to the lowest wick for support, from the highest wick to the highest close for resistance. Mark the zone, not just one line. Use a rectangle on TradingView, transparent color. Refine the zone on the lower time. Once marked on H4 or daily, adjust slightly on the 1 hour or the 15. Okay, so as we were saying, we've got the USD Chef 4 hour, and then what we're going to do is get a box, a rectangle, and you want to go from the highest body on this one to the high of the wick. So get off. There we go. So that is the area we're talking. Going forward, you just want to, the market's going to come down, do what it's doing, and look what happens as it gets back into this area. So as you can see, as it's in this area, this is where you're looking for price action, confirmations, and different types of reversals or whatever's going to be happening. This is where you want to be looking for whether it's going to go long or short in simple terms. So as you can see, what I'll do, let me get where is it gone? We got the crosshair. Oh, that was my favorites. Cross line, here we go. So here, as you can see, it's come up. We've got a double top. It's starting to wick out, which shows you that it doesn't want to continue through. One time, it's come back down. It's done the same thing again. This time, the bodies didn't even enter. It was just the wicks. And then same again. And this time, it's gone through. And then come back down. So you can see there's quite a bit of a struggle when it comes to going through this area. So you know that you can come down. You could get all these cells, trade all these cells. As it comes back up, you look for more wicks again, trade cells again. These are the ways you could make money. However, remember that this is lower highs, lower lows, lower highs, lower lows, lower highs, which means you're on an uptrend. So you're looking for buys mainly. You're looking for a trend reversal. Now, this kind of cancels out that. As much as you have the consolidation here and then it looks like it's about to go down, this cancels out that. So you need to then see what's coming up next before you make your move. But as you can see, it did. It reversed. And you can only see that. And you can see that just from the fact that the lower lows was leveling out. And then you had like a low here, then a lower low, higher high, higher low, higher low, higher low, lower low. And that's how you know the trend is changing. Same with the tops. You got higher highs, then it starts to like level off, and then lower highs. Yes, you did have a spike here. It's probably news, but then it's starting to come down again. And this is how you know when the trend is changing, just another way. That was in the last one, so if you haven't watched that, go back and watch it. Before I moved, sorry, what date is this? So this is 26th of September, 10 o'clock. Okay, so I can't go back that far. Okay, so I won't be able to show you in this one. I was going to go down to a lower time frame to kind of show you what happens in that frame. But do this yourself, go back to it and have a look and just see how price reacts in these areas. These are the solid areas where you want to be looking for price action to show itself and give you like a confirmation of whether the price wants to go up, down, or consolidate. Once you've marked your zones, wait for price to enter the zone. Look for confirmation, structure shift, candle patterns, etc. Then take the trade with stop placement based on the zone, not just below or above one line. This is how I trade every day. This is how I pass funded challenges. Zones give you context. They help you avoid false breakouts, time bear entries, and manage risk more precisely. So, in the next episode, I'll show you how to master break and retest, one of the cleanest and most consistent price action setups out there. If this helped you, like, comment, and subscribe. Grab your free price action roadmap and join the AutoMarkets community for more lessons and support. We're built, not begged. I'll see you in the next one.